Just last week, this time, we're at least at 13.91. Against the British pound, we're at 18 Rand 10 cents and 16 Rand 34 against the euro. So I think quite interesting to note that it is quite a significant roller coaster ride that we are based on. However, to tell us more about some of the international aspects influencing these currency dynamics, we joined now on the line by Lukman Otunuga. He's a research analyst at FXTM based in London. Lukman, always good to speak to you, but I don't think I should be saying that as a South African who's been monitoring our local currency, right? Quite a lot of news flow that's actually influenced the dollar-rand exchange rate, taking us from being one of the leading emerging market currencies to make gains over developed economy currencies just last week to actually being a loser right now when it comes to gains that we should have been making. Lukman,
thank you very much for having me.
Sure, anytime. Give us some sense of confidence and understanding regarding these pressures here.
Thanks again for having me here today. Yes, as we can see with the South African rand, it's not alone. A lot of emerging market currencies are actually feeling the heat of a resurgent dollar. And I find this very interesting because if we look at what happened last week, we saw that data from the United States, the jobs report, was actually quite disappointing. U.S. jobs report came in at 155K compared to the 189,000 expectations.
Sure.
What I was saying earlier was there's a possibility that dollar weakness can become a recurrent theme based on market expectations over the Fed possibly taking a pause in interest rates. But however, today we're seeing a situation where the rand and other emerging market currencies are under pressure. My answer to this is possibly ongoing concerns over slowing global growth, and the fact that US-China trade tensions still remain a dominant theme have actually caused investors to rush to the dollar, which is bad news for emerging market currencies.
Let's talk about that US economic data and why the jobs number is actually quite critical. What we have certainly witnessed is that the United States has been a leading economy, really standing quite firm in 2018 regarding job creation and, of course, finding itself in a firmer positioning. But how does this impact the dollar weakness, which isn't playing out when it comes to its trading activities with the South African rand and other emerging market peers?
Yes, before the release of the jobs report, investors were having some reservation over the dollar bull rally. They were asking, is the rally coming to an end? A few weeks back, Powell was quite dovish, and investors were thinking, okay, is this a situation where the Fed is going to move forward with taking a pause on rates? But what we can see with the data on Friday is actually reinforced speculation of the Fed possibly taking a pause. And if we look deeper into the U.S. economy, there's a possibility that growth could be experiencing a deceleration in economic momentum. Firstly, if you look at the U.S. housing market, the impacts of higher rates can already be reflected. There's a slowdown in the housing market, and will we keep in mind that the impacts of higher U.S. interest rates observed in the United States this year are lagged? There's a possibility that growth could continue decelerating as we move into 2019. Now, based on this, markets feel that the Fed are likely to take a pause in an effort to actually stop threatening growth from expanding, in an effort to stop threatening economic growth.
Lukman, let's talk OPEC for a moment. Meeting over the past weekend and now agreeing to actually cut down on production, which we know as oil importers is not good for us as South Africans.
So, yes, with the OPEC meeting, for an extended period of time, I've actually been quite bearish on oil markets. Before the meeting, a few weeks back before the meeting, what we were saying was the only reason why oil prices were higher were based on geopolitical risk factors. But when you keep in mind that the fundamentals behind weak oil prices still remain present, such as the fact that U.S. shale production continues to be robust as ever, and the fact that there are some concerns over slowing global growth impacting demand, even though OPEC have actually decided to cut oil production by 1.2 million barrels a day, the medium to longer term outlook for oil still points to further downside. And this, of course, is bad news for oil exporters.
Bad news indeed. Lukman, you're probably thinking that I'm very pessimistic and negative today, but as you can imagine, there's not much optimism, right, on the South African bourse today. So as we do wrap up and given the trends that we see regarding currency crosses towards this time of the year, Are there any hopes that we might see emerging market currencies see a resurgence in their performance as we wrap up 2018?
Yes, there is some hope. The fact is, we've seen that South Africa has actually rebounded from a technical recession, so that's the first welcome development. Number two, it looks like dollar bulls are coming out of the game and dollar bears are going to be main focus as we enter 2019, based on the fact that growth in the United States could experience a slowdown, and based on the fact that the Fed is seen taking a pause on higher interest rates. So a weaker dollar is good news. A weaker dollar is good news for emerging markets.
Weaker dollar, good news for emerging markets. So let's certainly keep our fingers crossed that those exogenous factors will work in our favor. Always a great pleasure speaking to you. That's Lukman Otunuga. He's a research analyst at FXTM, updating us on the global market themes that we need to consider. And whilst things are not looking too great for us as South Africans, we certainly hope that we will see a turnaround as we wrap up 2018.